they could then upcharge that interest rate and sell it to you at a higher rate. Is it even legal for them to do that? The answer is yes, they can do that. They can upcharge your interest rates. What is illegal is for them to, if vehicle manufacturers just priced their vehicles appropriately and didn't get so greedy throughout recent years, we wouldn't find ourselves in this position. My local Ford dealership here is completely stacked to the brim with inventory. We got Ford Broncos, big body Broncos, Bronco Sports, Expeditions down here, a bunch of Explorers, Super Duty trucks over here, the heavy duty trucks, Bronco Raptors even over here. What in the hell is going on here? What is that? Used vehicle inventory is a hot commodity for most dealerships. New vehicle inventory, it's not selling well across the country. The price tags have gotten far too high. When vehicles cost this much nowadays, you need to really deploy every weapon within your arsenal in order to get a huge discount and incentivize interest rate. How can you buy a vehicle with cash today while not getting raked over the coals with the final price tag? The average new vehicle purchase price here in 2025 is just over $49,000. A discount only if you finance through the dealership. So they had a sale price and then a sale price if you finance through the dealership, generally a bit less, maybe a few $1,000s less. YouTube, Untamed here. Do you remember the days when cash used to be king? Not anymore. Nowadays, when you go to a dealership, they will try anything in their power to try to get you to finance through them, through the dealership. In today's video, I'm going to highlight the many reasons in which a dealership will benefit by having you finance your auto loan through them, as well as what you need to be on the lookout for, what questions you need to ask if you do intend to finance your next vehicle. So stick with me as we talk through it all. Let me start by saying, if you are in a position to buy a vehicle with cash, there is a very tactful and very purposeful way to do that, and I'll talk through that in today's video as well. And like I say many times on my channel, the best type of vehicle is a paid-off vehicle. So for starters, why do we see dealerships push for in-house financing? It's really for two primary reasons. One is indirect lending, and the other one is they get kickbacks. Let me start with the kickbacks portion. So no matter what loan they sell to you, if they go through one of their preferred lenders, which they likely will, they'll try to farm it, your credit out to one of their preferred lenders, one of their preferred banking institutions, and if they secure an auto loan for you, they'll get an automatic kickback, whether it's as low as $300 or up to maybe $1,500, depending on the size of the loan, duration of the loan, and the interest rate that they lock you in at. So there's a few factors involved, but they will always get some sort of kickback from that preferred lender, that banking institution that they go through. Buying a vehicle is extremely stressful, which is why I produce a lot of my videos for you guys. I want you to be very well equipped, well armed for you to pursue that negotiation process. It really is a gauntlet, and if you're not well prepared for it, you're going to get taken advantage of. So that's why I walk you through these details to hopefully get you in a better position and give you better footing to negotiate a fair deal, at least a deal that you feel good with, right? Nowadays, all dealerships kind of look like this, just lines upon lines of unsold inventory. Inventory levels continue to grow with each passing month as we get deeper and deeper into 2025. New vehicles, they're not selling that well, which is why dealers need to get very creative. They need to get desperate if they want to move this metal. $48,615 for this Kia Telluride EX X-Line V6 all-wheel drive. They were charging markups. We're talking $10,000 over MSRP for this vehicle. But now look at them. Go to any dealership, what will you see? You'll see lines upon lines of these sitting collecting dust. This vehicle right here is the quote-unquote most affordable Kia on this lot. And there's only one of them. It's the Kia Soul EX trim. Hopefully you can see here, but the price tag, $26,975. That is the most affordable Kia. I remember it really wasn't all that long ago. You can go to a Kia dealership or a Hyundai dealership and easily buy a vehicle for 15 to 20 grand. And really, when I was in high school, they were $8,000 to $10,000, not that long ago. I personally remember when people would buy Kias and Hyundais as quote-unquote throwaway vehicles. And I say that term with endearment, I promise you. You could buy them at a very, very low price, drive them for 5, 6, 7 years before they really just completely fall apart on you. But they were justifiable before because of their price points. But not anymore. We got this little crackerjack Kia Seltos here, SX Turbo all-wheel drive, dang near $35,000. This right here feels unacceptable for what you're getting here. You tell me. In addition to the kickback that the dealership will receive from the banking institution, they can also benefit from indirect lending. And what I mean by this is when they take your credit application and send it off to their preferred lenders or their preferred banking institutions, their credit unions, blah, 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 whoever they work with regularly, they send it off and they get the best interest rate offering back. Pretend they got a 5% offering back for you to go buy a Ram 1500 pickup truck like you see behind me here. Pretend to get a 5% offering from a credit union that they farmed out your information to. They could then upcharge that interest rate and sell it to you at a higher rate. Meaning, pretend they give you 5% for the Ram 1500 from the bank, they'll upcharge it and sell it to you at a 7% over 60 months or 72 months or whatever you end up wanting, but they upcharge it 2%. They can do that. And by them doing that, they will benefit, of course, from the additional amount that you're paying in those monthly payments. Let's pretend that you paid maybe an additional $3,000 to $5,000 for your Ram 1500 if you carried that loan through term. Well, that dealership will generally benefit about 70 or 80% of that additional income, additional profit for the dealership at large. Remaining 20 or 30% of the profits to be made off that upcharge benefit the banking institution that issued the loan. So although they're selling it to the dealership at the 5% rate, the dealership is turning around and upcharging it for a higher profit margin. The bank will still benefit from it. So the banks are actually okay with it. That's why they don't clamor or push back. It's kind of a mutual relationship that they have worked with dealerships. And although it feels extremely shady, it really does beg the question, is it even legal for them to do that? The answer is yes, they can do that. They can upcharge your interest rates. What is illegal is for them to demand you to buy some additional protection package or an extended warranty in order to earn, quote unquote, earn a lower interest rate. They cannot do that. They can upcharge an interest rate and try to profit off of it. You can still say no to it, of course, but by them forcing you to buy an extended warranty or protection package for a few $1,000s in order to get that lower interest rate, that's illegal for them to do. How are you supposed to combat this? Well, you have a couple of options at your disposal. Number one, always feel free, and I encourage you to, ask that finance manager or the finance rep that you're working with, hey, what is the buy rate on my loan here? What you're asking them is, how much is the dealership paying for that loan from that banking institution, from that lender? What are they getting it for? Like in that example I just gave you, that would be 5%. They're getting that auto loan from that lender for that Ram 1500 for you at 5% for that entire loan amount. Then that upcharge, of course, the sell rate is what they refer to it as, being 7%, that upcharge rate that they're giving it to you for. I always encourage you to ask the dealership, say, hey, I'm only willing to make the deal happen if you can get it to me at the buy rate. If you can bring it down to the 5%, only then am I willing to sign on the dotted line and make a deal happen with you. Because keep in mind, they will still get that kickback. They're gonna get that monetary kickback of $300 up to $1,500 just for securing the loan through that preferred lender. So they're still gonna make money off of it no matter what, but they're just not gonna make as much because you asked the right question. What in the hell is going on here? What is that? Okay, well, we got quite a bit of hail damage on this 2025 Ram 1500 Laramie trimmed example, and well, the MSRP is still, hopefully you're gonna be able to see it, over 74 grand. When vehicles cost this much nowadays, you need to really deploy every weapon within your arsenal in order to get a huge discount and incentivize interest rate off of your purchase, right? And that includes being aware of the sleazy tactics that can often be deployed, that are actually deployed regularly by finance reps and managers at dealerships. 62,000 over here, every single one of them seemingly is over 60 grand here. Pretty wild. 76,000, 62,000. This one here, probably in the 70s here. Here we go, yeah, 73,000. These are for Jeep Wranglers, for Pete's sake. Pretty wild. As we talk through this, I wanna remind you guys, always take every opportunity to walk away from a deal. I know it doesn't feel right in the moment. You feel like, hey, if I don't capitalize on this deal right now, I'm gonna lose out. That couldn't be further from the truth. Every single time that I've walked away from a deal, I've always gotten my phone blown up by that sales rep or that dealership, calling me back within hours, sometimes, the next day, calling me back and saying, hey, if we can get you back into the dealership, we could drop the price an additional $1,500 if it means making a deal happen. And they always do. They will call you back and they will give you an even better deal than what you originally had slated out. Well, as you can see behind me, even if that deal does fall through or they sell it to somebody else, guess what? There's another dealership up the road. There's plenty of other exact options out there, that same exact vehicle, the same trim, available elsewhere. Just like when Candace broke up with you in 3rd grade, your mom said there are plenty of other fish in the sea. Just remember that, honey. Another way to get around it is, I always encourage people to go straight to their local credit union first and get approved, a pre-approval for an auto loan. So you want to have that hip pocket come time to actually walk into the dealership. That way, come time for you to sit down with the finance rep, you can just tell them, say, hey, I'm already pre-approved for a 4.5% interest rate through my local credit union. If you're willing to beat that interest rate, I'm willing to finance through you guys. But keep in mind, by them obviously taking your credit application and shotgunning it out to multiple credit unions and banking institutions, it is going to ding your credit a little bit. So have that in the back of your mind. Getting the pre-approval in advance helps put you in the driver's seat, of course, right? You become well-equipped and well-armed to ensure that they're not in any position to strong-arm you with a terrible interest rate. And well, if they upcharge that interest rate 2 or 3% higher than what you could have been approved at through your local credit union, that's going to add up tremendously throughout the course of that loan. If you carry that loan through term, you're paying a ton more for that auto loan. Just for context, the average new vehicle purchase price here in 2025 is just over $49,000, okay? That does include everything though. Trucks, SUVs, full-size SUVs, sedans, subcompact, everything is about $49,000 on average. So pretend you went out and spent $50,000 on a new Toyota 4Runner, for instance, right? You spent $50,000 for it. A 2% deviation in your interest rate is really the difference of $3,000 to $4,000 if you were to carry that loan through term, right? Let's pretend you did have a 60-month loan or a 72-month loan. That 2% uptick in your interest rate, it's going to cost you a ton more. So have that in the back of your mind. These aren't small figures we're talking about here. And hopefully you're going to be able to tell, but my local Ford dealership here is completely stacked to the brim with inventory. We got Ford Broncos, big body Broncos, Bronco Sports, Expeditions down here, a bunch of Explorers through here, double lined back to back, of course. Super Duty trucks over here, the heavy duty trucks, Bronco Raptors even over here. They're absolutely stacked, stuffed to the gills, right? So they need to move this inventory. They need to get creative. They need to offer huge discounts in addition to the incentivized interest rates. Don't settle for anything less right now. If they don't move this metal, it's only costing them tremendously. Every single month, they're getting hit with flooring cost. Every single one of these vehicles is on a line of credit. They don't just own these outright. The line of credit has a small interest rate, kind of like a credit card, but it becomes a compounding death by 1,000 cuts when they have, 200, 300, 400 vehicles sitting collecting dust on the lot. So it does beg the question, how can you buy a vehicle with cash today while not getting raked over the coals with the final price tag? Because you've seen so many dealerships do it. When I was shopping for my last F-150, a lot of Ford dealerships were advertising their F-150 lineups with a discount only if you finance through the dealership. So they had a sale price and then a sale price if you finance through the dealership, generally a bit less, maybe a few $1,000s less. That is because of the kickback and their ability to perform some indirect lending, right, and upcharge the sell rate to you. How do you get around that though? How do you pay cash? And what I encourage folks to do is when they ask you that question, when you first speak to the sales rep, they're gonna ask you two questions, right? Hey, are you planning to finance? Or are you buying outright? They're gonna ask you, are you planning to finance? I always encourage folks to say undecided. I'd like to make sure that we're gonna get the best deal before we determine one way or the other. And in my experience, that doesn't derail the conversation. They'll continue to work hard to try to maximize that deal for you. Only at the very end are you gonna let them know, hey, all right, I'm happy with these numbers, I'm just gonna buy it outright. At that point, they've already shown you numbers, so it'd be really, really bad on them to try to revoke that offer to you just because you're paying cash, right? So I always leave that, I show my cards at the very end. They also ask, are you planning to trade in a vehicle? Because, well, having a trade-in can tremendously impact that deal, right? How much they give you for the trade-in, they'll like to sprinkle in your tax savings because you have a trade-in credit, blah, blah, blah. For that too, I also say undecided until the very end. I want to get the best sale price on the vehicle that I'm trying to get before trying to negotiate anything else. And if you intended to finance all along, use it as your final bargaining chip. We know that they get a kickback. You know that they're going to get maybe $1,000 kickback from the lending institution. You know that they're likely going to try to do an indirect lending upcharge of your interest rate. Use it as a final bargaining chip. Say, I know we're at $30,000. If I were to actually finance with you guys, yeah, I would do the deal if you can make it 29 grand even, right? Use it as a final chip to negotiate that price down even further. Only does moving the metal get rid of the compounding flooring costs that they're getting hit with every single month for every single unit, but it also shows the vehicle manufacturer that they're moving inventory. And what that allows them to receive then is higher reallocation rates. So if they sell a bunch of Ford F-250 or F-350 Super Duties, they sell a bunch of them, that tells Ford, hey, this particular dealership in Wyoming is doing great with Super Duties, let's give them more allocation rates and give them more Super Duties. So it's only goodness for them. Moving the metal gets them more vehicle inventory to try to sell, thus giving them higher profit margins ultimately. Now I say use your trade-in as a final bargaining chip as well right now because used vehicle inventory is a hot commodity for most dealerships. New vehicle inventory, it's not selling well across the country. The price tags have gotten far too high where most buyers, they cannot justify paying that much and having those monthly payments. So if it means quote unquote saving $20,000 on a used example, F-150 here, compared to a new one over there, these are actually moving. So dealerships are trying to bulk up their used inventory and hike up the price tags just a little bit to try to pad their profit margin to make up for the lack of new vehicle sales, if that makes sense. Since January of 2025, we've seen a 10 to 15% uptick in the values of used vehicles across the board, right, on average. That's through wholesale, through auction, 10 to 15% higher since the beginning of the year. Right now across the country, we are actually seeing dealerships turn away their allocations. They're turning away the deliveries of a number of models, a number of vehicles. The Ford F-150 Lightning is a prime example of just that. A lot of Ford dealerships do not want this burden. These are a huge, huge task, a huge burden to sell for so many Ford dealers in most parts of the country, right? Even with huge discounts and government subsidies that were previously applied, they still couldn't move this inventory. So a lot of Ford dealerships are like, I'm not too interested in receiving 20 new Ford F-150 Lightnings this year because I couldn't sell the dozen that I had before. So vehicles like this are being turned away. That's not a good thing because what does it ultimately do? It ultimately is a trickle effect, a domino effect rather, of limiting, slowing, or even halting production of some vehicles. And what does that mean? That means laying off assembly line workers, having adverse impacts on workers, right? And I don't like to see that, but that unfortunately has to happen. I really believe that if vehicle manufacturers just priced their vehicles appropriately and didn't get so greedy throughout recent years, we wouldn't find ourselves in this position. Vehicle MSRPs have risen tremendously since 2019. I've talked about it plenty on the channel, but I think it's an important note to mention, right? They've seen a 42% uptick in MSRPs over the last 5 to 6 years. That's crazy. It's a crazy amount of growth, and obviously inflation drove that, but well, salaries and wages of most people, most Americans, didn't keep up, not even close. Now I want to show you this brand new Toyota 4Runner SR5 on purpose here because I really believe this is a prime example of just how expensive things have gotten. This is an SR5 trimmed example without even having the iForce Max in it, the hybridized, quote unquote, top of the line engine underneath the hood, but instead a 2.4 liter turbocharged 4-banger, but still $46,000 for an SR5. An SR5. Right there, I mean, this used to get you on a well-spec'd TRD off-road just last year. But with the new generation here, they upcharged them tremendously. Big part of the problem. I mean, it's quite telling that the Toyota Tacoma here and the Toyota Tundra, just those two pickups, account for 41% of all of Toyota North America's inventory right now on dealership lots. 41%. Absolutely insane. There's a reason why those are not selling. The vast majority of Toyota Tacomas are well into the $50,000 plus range. Heaven forbid you want a top trim TRD Pro or Trail Hunter, get ready to fork over dang near 70 grand. Absolutely sickening. Because of that, vehicles like the Toyota RAV4 are actually selling because they make sense. It makes sense to have a tiny 4-cylinder engine and a hybridized four-cylinder engine within this platform. Not so much their pickup trucks and their off-road oriented SUVs, right? These right here, they're affordable too. You get great fuel economy. This one here, $38,000. This one here, that's XLE Premium. This one right here, $34,000. Another XLE. This one right here, $34,000, and another one, $38,000. All under 40 grand, and they offer tremendous peace of mind still. So just know about indirect lending. They're going to get a kickback. Ask them what that buy rate is versus the sell rate. Be informed. Come prepared with your own pre-approval from a credit union, your local credit union. Know what you can get for an auto loan and try to have that dealership beat it. And if you're going to pay cash, use it as your final bargaining chip. Mention it only at the very end. Use your financing option as a bargaining chip to try to save a little bit off the final price of the vehicle. As always, guys, I sincerely appreciate you taking the time to tune into this content. If you appreciate it whatsoever, please consider liking and subscribing. Your support means a ton, and I promise you it doesn't go unnoticed. Until next time.